Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, October, October 1st. Wow, it's getting into the deep into the year here. Let's jump into this. We got economic news releases scheduled and a bunch of important ones. We'll start off with the ADP employment for the month of September. So back in August, we had 202,000 new jobs created. It was lower than they had anticipated last month, but this month it came up to 213, so it's an improvement. So we'll kind of see how this is playing out in the market here shortly. But we also got manufacturing with the market PMI for the month of September. So we had a 57.9 last reading, and it dropped a little bit down to 57.5. And also ISM, this is also another manufacturing number that came up. We had 59% initially, and then forecast was 58.5, and then dropped further, 56.6. So anything above 50 on both these numbers actually means that there's expansion, but as you can see, it's not a big expansion. It's very modest in these numbers. Last but not least, we got the construction spending for the month of August. So we go back a little bit, and this is obviously into the summer. We had July. Numbers came in at 1.2. The forecast is supposed to simmer down to 0.5% for the month of August, and actually had contracted a bit in August. So not great numbers in that respect as well. So let's take a look at it. We got the stock markets down. The Dow so far has actually been down almost around over 200 so far this morning. A lot of it is because the numbers of the ADP employment numbers that came in today is kind of spooking the market, because they're afraid that these numbers for Friday may be a little bit better, and it's spooking the market, so they're selling off their assets in order to because they're afraid that the Fed's it's just gonna force the Fed to start raising rates sooner than they anticipated. So this could potentially create a correction in the stock market. On the other hand, it's kind of, as you can see, this is helping out the bond market. As we've talked about in the past, last month we had the Fed did their last purchases of the quantitative easing. So the last $15 billion that as each meeting they're dropping about 15 billion. So they did the last one. Now they're still buying into when they mature. They're still reinvesting that into the mortgage-backed securities, which is helping. But as you see the pullback in interest rates, you can see the trend that they could go up. Now the correction in the stock market could help offset that, or at least slow that trend upwards, which that money typically will go to a flight of safety, which is mortgage-backed securities or bonds or treasuries. This will help alleviate the trend upwards. But as you can see, in this scenario, the Fannie Mae, when it goes up, that means the rates are coming down. So that helps us because the supply and demand portion of this. So today we had a nice spike in the money coming out of the stock market going into the bond market and helping out interest rates, and get a nice little spike and having a nice improvement in the interest rates today. All right, you guys have a great day, and watch out for tomorrow. We do got the ECB coming in. That could be those are going to be one of the important news this week. We got the jobless claims coming in tomorrow, so this week it will be important. And then utmost on Friday, we got the Bureau of Labor Statistics will go ahead and release their jobs numbers, and that would be a big on Friday as well. All right, have a wonderful day. Thanks for watching, and we'll see you guys tomorrow.